Stocks have doubled in just 5 years, but Saira Malik warns that 3 key forces could finally put the brakes on Wall Street's historic rally. Inflation fears, China trade turmoil, and a lingering government shutdown. Find out why Nuveen CIO sees momentum and tech stocks facing a seasonal setback before AI leads the next charge.
Inflation, we're finally going to see CPI tomorrow, and that's likely going to be firm, up almost 0.4% month over month, driven by tariffs on goods prices. And also oil prices rallying again, another factor to drive inflation higher. November 1st isn't here yet, so we don't know exactly what's going to happen between the U.S. and China, so that's causing uncertainty. And then the shutdown now about 3 or more weeks long. When is that going to end? So I think, and then finally, looking at momentum stocks, which have been what has driven this rally higher, November through January tends to be seasonally weak in terms of momentum stocks. So I think they will likely ride the market lower for the shorter term.
I guess if you're believing the rally is going to continue, you got to believe in AI, right? Is that a fair statement, Sarah?
I think AI will drive the markets higher over the medium to long term. AI is alive and well. Looking at third quarter earnings, which when all is said and done should be up over 9%. 3/4 of that earnings growth is going to be driven by technology companies. We're going to see significantly more investment in AI and much more commentary from companies about how they're implementing AI into their business models to increase productivity. But as I mentioned, over the next 2 to 3 months, we may see this rally take a breather. This is the seasonally weak period for momentum and tech stocks. But after that, I think it will be off to the races, and we're not going to go into a permanent bear market in the near future.
How do we look at the Federal Reserve in years ahead? Because Jerome Powell is the current chair. He's got a couple meetings left. We're not saying goodbye to Jay Powell yet, but we've already talked about a potential successor. That person likely to be a lot more dovish than Jerome Powell is right now. How do we view the Fed's role in the stock and bond markets next year, going forward?
The Fed will remain a significant driver for stock and bond markets. We saw 1 cut last month. We expect 1 more cut at the end of October, and then 2 more cuts after that by about the second or third quarter of 2026. I think the next Fed chairperson will be reasonably dovish. The balance, of course, for the Fed is inflation versus the slowdown in economic growth. Even though we haven't seen an array of employment numbers in a while, we do know that employment markets were slowing and are continuing to slow. So the Fed needs to balance that with the impact of tariffs on inflation. I do think you'll get this moderate pace of rate cuts, though. So starting last month, 3 more cuts through about the 12 months past September 2025, and then we'll see from there.
Utilities used to be the most boring stocks in the world. They were like annuities. They grew a little bit every year. They kicked it off in terms of dividends and cash flow. They just, as long as the light and the heat worked, you really didn't care, but that's changed. And a name like a NiSource, which is really a public utility of Indiana and some other places, they're now sort of sexy AI plays.
It's right. Utilities are the new AI derivative plays. They're much cheaper. They come with those great characteristics that you just mentioned. Income generation. Also, they tend to be more defensive for those who are worried about an economic downturn. But on the upside, all those data centers and all the electricity that's needed for artificial intelligence needs to come from those utilities. NiSource is a stock that we think is attractive. Not only is it based in Indiana where they have strong loads, but also as we need to upgrade our grids, not only for AI, but also as we shift to using more renewable energy, we're going to need more from our utilities. And that's a nice, less cyclical play on AI and data centers.
I like it. A little shout out to I guess Indiana is considered the Midwest, the Corn Belts utility. Saira Malik of Nuveen, really appreciate your time. Thank you very much.
Thank you.